It is the end of the year and your accountant comes to you with some good news. Boss, this year we have made a profit of Kenya shillings 100,000. You're happy, you are excited, and you almost want to go to the bank to withdraw that amount of money. But before you do that, I want to remind you, you need to seek KRA's permission twice. If you fail to do that this Christmas season, what you will receive from KRA is not a Christmas card. They will send you a tax assessment notice packed with penalties, fines, and interest. Why? Because not all monies that remain in your account is your money. And there's a very huge difference between how a company is operated from how a farmer operates a farm. This Christmas season, if a farmer has been cultivating sukuma wiki or maize, they just go to their farm and they cut whatever crop they need and they consume it. But for business, every other time you withdraw money, you have to first seek permission of KRA. Now, which are these permissions that I'm talking about? Permission number one, from the 100,000 that you have generated as profits. And by the way, congratulations. This year has not been very easy, but for your company, your accountant is sure you guys have made 100,000. Okay, good. You need to first pay corporation tax. Corporation tax is charged at a flat rate of 30%. So from 100,000, yes, you have 100,000 in your bank account, but kindly take 30,000 from that 70,000 and bank it to KRA's account. No grudges, no hard feelings. You are now left with 70,000. And remember the 100,000, by the time you are getting to 100,000, you had deducted all the expenses from the revenues that you had generated this year. From rent, salaries, transport, fuel, airtime, 100,000, you are left with it. And you are saying, it is not your money yet. Give that 1,000 to KRA as a matter of urgency and as a matter of fact. You are left with 70,000. Before now you think this money is your money, pay 5% of that amount to KRA as withholding dividend tax. You pay twice in terms of taxes on the 100,000 that you reported. The first one, it was your company paying taxes on that amount of money. The second 5% of the 70,000 which is remaining is now you as the shareholder, as the director of the company, paying taxes to KRA. Every other person, whether artificial or a natural person, has to pay taxes to KRA. Remember, you and your company, you are two different persons. Law recognizes a company as an artificial person and the company has to pay taxes. And before now, the company gives you the money. Once you receive the money from the company, you also have to pay taxes. And this is what I'm saying as 5% withholding tax. How much is it? 5% of 70,000 is 3,500. 3,500 again paid to KRA. And the amount that you are left with, now it is 66,500. You are free to use it. It is at that point you can find your way to the bank laughing as you go to withdraw that amount. But remember, even this amount of money, 6,500, as you spend it, you will be paying more taxes. If you go to the petrol station to fuel your car, that price of fuel has 16% VAT on it, extra taxes. When you are buying clothes for Christmas for your kids, shoes, anything that you'll be buying, again, there are taxes on those prices. So it's good to understand that, because when it is not very clear to you and you think that the 100,000 that the accountant reported to you as profit of the year, and you think that it is your money, think twice. Deduct corporation tax at the rate of 30%, deduct withholding taxes for dividends at a rate of 5%, and what is left is what now you can enjoy. But as you enjoy, remember, there are more taxes. So as you go for the Christmas season, for the festive season, just know this: any money that is in your company bank account, it is not your money 100%. Budget for corporate tax, budget for withholding taxes, and whatever remains, you spend it knowing very well there is indirect tax that will be paying as you spend that money. And more importantly, if there is confusion about why you have to pay these taxes, how and when, always seek professional advice, and not, of course, the medical advice or the medical help. I'm saying get a tax consultant, someone who has good understanding about the tax laws in Kenya and what KRA expects of you. Because when you do that, you protect your business, you protect your profits, and more importantly, you protect the peace of your mind.